Well, the week started off with some wonderful news. Thanks to Mr. Bill Gates, my computer system had several bad days, and I was not able to bring you the regularly scheduled daytime drama. I now think I'm back on the straight and narrow, but we'll see. And a bit of advice for Mr. Gates. If it ain't broke, don't fix it. As for the stock market, on Friday it started briefly in the red, but quickly moved into the green as conflicting reports about the U.S. trade deal with China were released. Once the dust had cleared, the deal included a halt to new tariffs on goods from China and a rollback of some of the prior tariffs. The Dow Jones Industrial Average rose by about 159 points at its peak, and the three large cap composites reached all time highs. However, the market became quickly overbought and the indices all returned into the red. The rest of the day was characterized by choppy sideways action because, in my opinion, the New Deal is still unclear. But that was the focus of the media. The real news this week was that the Federal Reserve Bank of New York announced plans to conduct additional repurchase agreement operations that could fund the markets through the year end with more than $500 billion. Now, let me save you the details and say that this just might impact the markets. You think? Well, let's take a look. And we're looking at the 20-year monthly chart on their spiders. The SPY and the close on Friday was 317.32, near an all-time high. Now we're hovering well above that 20 and 50 EMA. And recently I told you I was waiting for a pullback, but with the news regarding the China-US trade deal, even though we don't really know the details, I think it's going to keep things elevated for a period. And certainly that $500 billion, which is going to come through this year and beyond. I'm not sure of the exact timing yet, but 500 billion, yeah, a week or two here and there, it's not going to make any difference to the stock market. I think we're going to head up. Looking here down at the MAC, you can see that the fast line moved through the slow line, and there is very strong acceleration. I think this thing is going to continue to move. We're going to have some pullbacks now and then, but I think overall we are heading up. And that's shown here in the histogram. The price rate of change hasn't moved off that slow line yet. It will. The relative strength index, 71.08, that's a moderately healthy level. Looks like we're moving on up. Into the stochastics, same thing. In that overbought territory, hopefully we'll be able to hang up there for a while. And into the volume. Volume looks fine. And then the Williams. The Williams told us a long time ago from that bounce here and that move on up that the market was going to head higher. And it did. So for right now, I think we're going to have to say is that the market is going to head higher. We'll talk about any pullbacks sometime later, but for now, everything looks like a green light. But as usual, be prudent. Keep some dry powder. I was waiting for that pullback of Berkshire Hathaway. I think I'm going to have to sit longer with my money. But I have about 3/4 of my money still in the market. So that's not too bad. And I've got plenty of dry powder in case opportunities come by. And as you know, opportunities come every day in the stock market. So keep your eyes out. And for today, that's ChewDog Charts. Thank you.